the most observable economic environment of my 30-odd year career. And it's so obvious what 2024 and 2025 are, and that's more stimulus. They're going to be cutting rates. If they screw it up and inflation does go up, they will use yield curve control, which is printing of money, to maintain interest rates, which Japan has been doing. But generally speaking, it's a year of stimulus. In a year of stimulus, as investors, we need to say, okay, what's going to create the biggest opportunity set? The multiplier on all of this is crypto. It always outperforms all other assets, particularly in these moments.
Raoul Pal is a renowned macro analyst and prominent digital asset investor. Much like the rest of the cryptocurrency industry, Pal is especially bullish about the 2024 and 2025 cryptocurrency bull market because he believes there is going to be a confluence of various crypto and macro factors that will cause massive increases in crypto asset prices. On the macro side of the equation, Pal is certain that 2024 will be like all other U.S. election years, and the Federal Reserve will be hard-pressed to ease up economic conditions to incentivize voters. Pal believes these economic incentives, which he says could begin rolling out any day now, will include everything from massive interest rate cuts to outright money printing. According to the former Goldman Sachs executive, 2024 begins the debt refinancing part of the 4-year economic cycles for the Federal Reserve and other major central banks. This means these central banks will need to end their quantitative tightening policies and embark on some much-needed easing to service their massive debts. Pal explains that the debt refinancing cycles and perpetual monetary debasement are all a part of the everything code. The other part of the code is how each asset class responds to the constant monetary debasement. According to Pal, only 2 assets have managed to and will continue outperforming. They are crypto and technology stocks. Pal explains that cryptocurrencies have a huge edge in that the 4-year halving cycles align perfectly with the business and U.S. election cycles. In 2024, we get everything all at once: a Bitcoin halving event, rate cuts, and provision of monetary stimulus to ease up economic conditions leading to the election and help the Fed service the nation's $33 trillion debt load. For Pal, this means a crazy appreciation in crypto asset prices, which will further be intensified by the approval of a spot Bitcoin ETF in January. We will now bring you clips from Pal's latest interview with Coin Bureau as the macro guru gives his outlook for the 2024 cryptocurrency bull market. Pal has some extremely bullish and insightful outlook for crypto and macro in 2024. So ensure you watch, share, and like this video to avoid missing any important details. Also subscribe, turn on post notifications, and don't forget to drop your comments below. Thanks, and enjoy.
My view and my macro work was that the present state economy is bottoming right now. All the future forward-looking indicators all bottomed. Global liquidity, global financial conditions, they all bottomed last year. And the market's priced in a recession then. We've still got markets that are cyclical pricing in a recession now, stuff like the Russell 2000, oil markets, commodity stuff. But really all the forward-looking stuff priced it in a while ago, and it's been following financial conditions on a forward-looking basis. From all of the work that I do, I see nothing but stimulus coming this year. To Tim's point, there's, stimulus is another word for debasement of currency, and they do it in a number of different ways. The worst one, the most pernicious one, is the printing of money and putting it on the central bank balance sheet, using the balance sheet to buy debt, because what you're really doing then is pure debasement of currency, and most people don't understand what it is. They don't understand the fact that their purchasing power in asset terms goes down. So assets optically go up in value because the purchasing power of the dollar versus scarce assets goes up. And, crypto has been the best horse in that race. Technology has been particularly good at offsetting it. If you divide the S&P by the central bank balance sheet, 0 performance since 2008. Gold, 0. In fact, gold is negative. Real estate, 0. It's only NASDAQ, only technology and crypto that's actually outperformed the debasement of currency. So it's really important what horse you back. So we're going into 2024. We've got sluggish economic growth. I think inflation will continue to fall all year because I think structural issues within the economy, from aging populations to AI, will actually surprise people to the downside with inflation. So I'm not an inflation sticky person. There's different types of inflation, right? We're talking asset inflation caused by debasement of currency versus CPI inflation. In a election year, the government's job is to give out as much candy as possible to voters. All they want to do is buy votes. You will always get stimulus. Since 2008, we had a great reset of the debt markets. Every major government hit 100% of GDP in debt by 2008. That's the Europeans, the Brits, the Americans, Japanese, Chinese. And what they all did was cut rates to zero in 2008. That was essentially a debt jubilee. It's like you don't pay the interest on the debt. That's really what it was. So if you don't pay the interest on the debt, what did they do? They all refied all of their debt. So it's 100% of GDP in debt. So all economic growth essentially goes to paying off the interest payments on the debt. So what you need to do is lower the interest costs of the debt. They did that, and every government reset their debt to 3 to 5 year. That 3 to 5 year cycle is the debt refi cycle. It's exactly how the economy has been working. So you come into year 4, it's the down year. That's when the economy slows because rates have gone up because they have to try and refi. What happens is rates then fall. They use the balance sheet, and they use the balance sheet to pay off the interest of the previous cycle. And I've kind of proven that out over time. That 4-year cycle is exactly the same as the Bitcoin halving cycle. Why? Because Bitcoin came in 2008. It's also the same as the presidential election cycle. Why? Stimulus, right? They're all the same thing.
During the interview, Powell describes crypto as a gift that just keeps giving. Though the infamous crypto winters can be very harsh, especially for investors used to the much milder volatility of traditional asset classes, top cryptocurrencies like Bitcoin remain some of the best performing assets in the world. Furthermore, the crypto assets have even more upside volatility, which means they appreciate rather nicely during the 3 other seasons: crypto spring, summer, and fall. This year, for instance, Bitcoin has risen by almost 160%, starting from the same period in 2022. Yet, many people agree that the bull market is only just beginning. Powell, for one, believes we are still in crypto spring, waiting to welcome both crypto and macro summer in 2024. Crypto summer brings the ETF and halving event, which means more demand and less supply. On the other hand, macro summer brings more cowbell from central banks, which means further monetary debasement and higher incentives for people to invest in crypto.
So the other thing to bear in mind about 2024, 2025 is, okay, we've now built the ETF, which I think of as a trade deal between crypto land and fiat world. It's not immigration into crypto land because these people are using centralized counterparts to do this, as opposed to myself, who will use my ledger device for self-storage. But we're going to bring a lot of FDI, foreign direct investment, and tourism income into crypto land. Huge amounts of it because of the stimulus and the fact that it's the best returning asset price on earth. So we've got that to also ignite this crypto economy. On top of that, Tim and many VCs like him have piled money in 2020 and 2021. 67 billion went in. That money has been building applications layers, infrastructure layers, all sorts of stuff. Right, a lot of this will come to market. Some of it doesn't. Some of it failed in the down cycle, but there's a lot of stuff coming to market. And so how I look at this is this cycle, as we go from 516 million wallets to, I think, 1 billion and beyond in this cycle alone, that it's going to be an everything, everywhere, all at once cycle. All of the kindling is in place. The banks, all the asset management firms are both investors, but are also building on blockchain rails. All of them. So whatever Jamie says, and I've spoken to him directly about this, that he's wildly interested in this space, and they will, JP Morgan, Goldman, everybody are building on these rails. The big brands are building on the rails for Web3. We're seeing a lot of that already in sports teams, car companies, luxury brands. I think the breakthrough of Solana compressed NFTs, allowing for 1 million NFTs to be minted for $100, means that allows ticketing and other breakthroughs of what we can use NFTs for, because NFTs are not just PFPs and stuff like that. In addition, the ongoing rise of stablecoins. That's basically a tokenized euro-dollar market that allows somebody working in the rice fields in the Philippines to own dollars, which is impossible for them. And then just the ongoing adoption of crypto. So I know it sounds ludicrously bullish, but that's where we are in the cycle. I mean, I've been in crypto since 2012. And each time you just see it grow and grow and grow as more participants come and more use cases get built out. It's a very concentrated bet, so I'm pretty much 100% crypto and I have been for a long time now. And I make asset allocations about weightings. I don't really do, and I've tried it in the past to try and own a broader diversified base of tokens. I just end up with shrapnel in my wallet that I don't care about. I like to really focus on what I'm doing. So my big focus for this cycle is Solana, and that's been for the last year. Obviously, I have a lot of ETH. I still have some Bitcoin, and then I have a few other tokens here and there. But really, it's a very concentrated bet on what I think is going to be the breakthrough for this cycle. And so, yeah, I'm not diversified at all. So I'm a terrible human being because I'm an investment guy and I should have this broad diversified portfolio. I'm not at all. I'm a profit maximalist when it comes to the opportunity set, but a philosophist when it comes to the opportunity set that this whole space provides.
Last week, the Federal Open Committee voted unanimously to keep the benchmark overnight borrowing rate in a targeted range between 5.25 and 5.5%. Committee members also indicated at least 3 rate cuts in 2024, with one member hoping for 5 rate cuts if inflation holds steady. The markets have generally priced in some 5 to 6 rate cuts for 2024. Regardless, the FOMC's announcement and Fed Chair Jerome Powell's unusually dovish remarks came as a bit of a shock, but certainly not to Raoul, who has been predicting very similar moves from the FOMC and Powell for several months. Do you agree with Powell about the reasons for the FOMC's sudden change in tune? Are we about to get another truckload of money printing, increased debt, and even higher debt servicing costs? How do you think that will impact crypto asset prices? Please drop your thoughts and observations in the comments section below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks for watching.
Hey Savvy Finance enthusiasts, massive shout out for being the heartbeat of Savvy Finance. Your support has been the wind beneath our wings, and we can't express our gratitude enough. Now buckle up because we've got an exclusive deal just for you. Ever wanted a slice of the action? We're offering a golden opportunity to own part of our YouTube channel's potential future revenue. This isn't just an investment, it's an invitation to be a part of our story. Investing means you're not just an investor, you will be a participant in the future of Savvy Finance. No cheesy lines, just a genuine call to embark on this journey together. But wait, there's more. Your mission, should you choose to accept it, become a Savvy ambassador. Share our videos on every platform, Facebook, Twitter, LinkedIn. Your shares amplify our visibility, potentially translating to more views and more YouTube revenue. Here's the kicker. If our viewership increases, we would not be just growing financially. We would be making a tangible impact by spreading valuable financial education. Now the icing on the cake. Invest and you'll score exclusive access to our private Savvy Finance Discord. Here you can chat with Savvy Finance, swap ideas with fellow investors, and be at the forefront of exciting developments. Click on the link below to register your Gigastar account. You can also find the link to my offering page in the description below. Get your Gigastar account ready, review the offering details, and let's embark on this thrilling venture together. To the incredible Savvy community, thank you for being the backbone of our success. Your journey is my journey, and together, we're creating waves. Cheers.